fundsupermart.com.
Tell us about your background in asset management. How long have you been in the business, and which other firms have you worked in?
Well, I was with the Singapore Government Service in various economy policy roles for about 4 years. That was before I joined the industry in 1995. Thereafter, I spent 10 years with Schroder Investment Management, ultimately managing two of their flagship funds in Singapore, namely the Schroder Asia Growth Fund and the Schroder Singapore Trust, before I left in 2004 to help start up the Singapore office for Mirae Asset Global Investment Management. I was the CIO in Asia Pacific ex-Japan for about 3 years before I left in 2007 to join Nikko Asset Management. And since then, I've served as their CIO for the Asia Pacific ex-Japan region.
Can you describe your investment philosophy?
Well, our basic thesis is that the stocks go up if they have earnings growth. Ultimately, stock prices are driven by companies' earnings, basically. So that is why we take great pains to discover companies that can grow well on a sustainable basis over the foreseeable future. So you can say that we are essentially bottom-up stock pickers. But the difference between us and our competition, who also use that methodology, is that we have a top-down overlay. Call it a thematic overlay, if you may, but essentially what I mean is that we look for big picture factors, macro factors that will affect the prospects of companies in the region. Because no matter how good a company management is, if the global or macro big picture is against them, it is very hard for them to grow. So if we can put the two together, find companies that can ride on the back of a very good positive big picture trend, and if it's managed well, then probably if you invest in it, then you've got a winner in the making.
Tell us more about the team at Nikko Asset Management Asia Limited and how they work to uncover investment ideas.
Well, basically a research-based team, and the research analysts are organized by sector, covering stocks within the same sector across the region. The fund managers are organized by country, so we have a matrix structure that tries to cover the region in as comprehensive a manner as we can. Within that structure, what we seek to achieve is that we want the capability to be able to do regional-wide comparison across the sector. But at the same time, we also want to be able to compare sectors within a country. So within that structure, we can do that. As far as the bottom-up is concerned, I think to uncover good ideas, you basically need to build knowledge, and the starting point is bottom-up knowledge. So the team, they visit companies, they do research on them, and accumulate, and together we assimilate a group of companies which we think are the best-run companies across their respective businesses. So this is basically the bottom-up, the starting point. It's like, the planting a crop, and you got to plant it on fertile field. So this is like identifying the fertile field to plant the crop. Now the step number 2 is, of course, to find the right season to sow the seeds. And if you sow a seed in the wrong season, you're not going to get any crop that grows out of it. So basically, it boils down to getting the top-down thematic right. Finding the top-down factors that companies can latch on to, in order for this crop to grow. And thirdly, of course, you've got to sow good seeds. I think the excessive valuations, for example, it really make a seed bad. So there can be very good companies, but if they're excessively valued, there's no point. Because all the good news is already in the stock. It doesn't equate. A good company don't necessarily equate to a good stock idea. So basically, what we want to achieve is that all all three stars must be aligned. Good company, good top-down macro factors driving the company prospects, and cheap valuations. That is when we get a good investment idea. So basically what I'm saying is that rather than trying to find an undiscovered gem, and sometimes we do find such ideas, but in today's world where the information advantage is very hard to come by, I would rather think of ourselves as knowing what we know best and waiting patiently for the opportunity to buy it cheap. And nowadays, there's always a lot of opportunity for you to do that. I mean, look at current crisis. When fear grips the market, the whole market is selling at a bargain. So that is when we go out there and grab the gems. And that's how the portfolio seeks to outperform over a longer period of time.